Hello and welcome. You're watching Policy Watch, your weekly roundup of all the big economic policy decisions that have been taken across the country, how that impacts our country, our economy. We'll be talking about that to a special guest. Amiti Sen, senior assistant editor at the Hindu Business Line, joins us to help us understand. This week we are analyzing the trade deficit and also as far as the investment atmosphere in India is concerned. Finance Minister Arun Jaitley is in the United States pitching for India, pitching for investments in India. How successful is that pitch? We'll be analyzing that as well. But first, let's start off talking about the trade deficit. Now, the week brought in some mixed signals for India's foreign trade. Exports registered a substantial decline of 20% in May. But on the other hand, India's current account deficit shrank to just 1.3% of GDP in 2014-15. Here's a report.
Weak demand in global markets that covered both developed and emerging economies, coupled lower commodity prices, led to a steep fall in India's exports in May for the 6th month in a row. Experts blame the high cost of credit and transaction as the main domestic factors, besides weak global demand for pulling down exports.
Global factors have definitely played a role, and the most worrying point at this point of time is that even the emerging economies are slowing down. In 2008-2009, we have been able to sail through this crisis because emerging economies, they did very well, and though the advanced economies were slowing down.
In May, India's overseas trade was valued at $22.34 billion, which was $28 billion in May last year. All key exports, petroleum products, gems and jewelry, engineering and chemicals declined in May. However, the week also brought cheer to the government as the latest RBI data showed a steep decline in India's current account deficit during January to March this year. In the fourth quarter, it was $1.3 billion or 0.2% of GDP. Current account deficit for the year was 1.3% of the GDP.
Let us not draw satisfaction of compression on the CAD, because CAD is reducing with the lesser imports happening also. And when we are talking about the lesser import, some of the lesser import may not be good for Indian economy. If your capital goods import is going down or key raw material which you require for production is going down, that's not a good sign for manufacturing as such.
There is another positive development on the forex front. The Reserve Bank was able to add a whopping $61.4 billion to the foreign exchange reserves in 2014-15 compared to $15.5 billion in the previous fiscal, taking the total reserves at $341.6 billion at the end of March. Krishnanand Tripaঠি's report for Rajya Sabha Television.
And Amiti Sen is here with us. She's the senior assistant editor at the Hindu Business Line. Amiti, talking about the May figures as far as the trade deficit is concerned, I mean, so let's break it down. Let's talk about the exports first. The big worry, there has been a declining trend as far as exports is concerned, but a 20% drop is a cause for concern, isn't it?
Yes, definitely. Well, the export drop was sharper in March, like it was around, I think, 21.4 or 5%. But exporters had expected, after the foreign trade policy was announced that, things might improve. But, the May figures have belied that hope. And 20% fall is really disappointing for them.
All right. So why is that happening? Is it something particularly wrong with our economy, or is it global cues? What are the factors that are at play over here?
Well, mostly it's a global issue. Like exports have been falling for the last 6 months. Like since December, it has been falling and there's been no relief at all. So every time, people have been expecting that things are improving, something or the other happens. When the US was improving, people were hoping that, the US exports would pick up. But then the latest figures in the US also show that there has been a drop there as well. Right. The EU crisis is continuing. So I think it's basically a global phenomena that is impacting exports from the country.
What about our neighbor China? Because as far as India is concerned, I mean, we're always viewed in comparison with China in terms of emerging economies. The IMF has said that India could become the fastest emerging economy, beating China as well. But I mean, the export slowdown is, of course, affecting China as well, and therefore affecting all developing countries, all emerging economies?
That's right. The slowdown in China has had a worse impact on, the global trade, because the emerging economies have also started getting hurt because of the slowdown in China. Like when China slows down, it exports less, it imports less, and since China's exports are around 12% of total world trade, it does make a big difference. So not only India's traditional markets, the US and the EU, not only are they shrinking, but recently we have also seen, emerging markets shrink. So that is a cause of major concern for exporters from the country.
All right, but why is that shrinkage happening? I mean, across the world, is the world economy in trouble, and how well is India prepared in that sense? I mean, we have a lot of stress happening on government initiatives like Make in India, which promote manufacturing ultimately for exports or even for domestic consumption for that matter, but primarily for export. That's the kind of message that has been sent out by the government. So are we prepared for a weak global cues for some time now? Do you expect these cues to continue?
Well, everybody is hoping for, a change in fortunes as far as the world economy is concerned. But yes, we have to be prepared for a longer, continuation of the slowdown. So when the global demand contracts, we have to accept that other countries would try to get more competitive. They would cut down their prices. So that will have effect on our exporters' margins as well, and make it that much difficult for them to hold on to the traditional markets.
All right. As far as exporters are concerned, I mean, there is a little bit of cheer because the rupee, of course, has been in the exporters' favor for now. But in terms of the overall economy, because we're talking about the figures as far as May is concerned, and the slide in the rupee has also been a cause for concern, isn't it, for the overall economic health of the country?
See, as far as the exporters are concerned, it's basically a silver lining in their dark clouds because, a devaluation in the value of the rupee means
more value for the dollar.
More value for them. Like they get more for the dollars that they earn. But yes, for the overall economy, we know that it would also escalate our import bill. So for the overall economy, the rupee has to be valued at the right value. But for exporters, yes, it's a relief at this time of crisis for them.
All right. So you talked about exports, you talked about imports. What about the trade deficit now? That's lowered. I mean, in India, perhaps we often link these figures with a lot of jingoism and say that yes, trade deficit is going lower, our economy is getting better. But is it really getting better? Is this figure reflective of the real economic situation as far as the trade deficit is concerned?
See, if we look at our May trade deficit figure, it is actually not very low. It is $10.5 billion. So it may not be a high, $18 billion or $19 billion, but it's also not, $4 billion or $5 billion. It is at a moderate level. And we have to also try and understand why this figure is at this level. It's because, the oil prices are low. So if we look at our import bill, we import, around 80% of our petroleum needs from, we import that. So because of low oil prices, our import bill has been low, which has really helped us over the last few months. So in the, I think, January-March figure, our current account deficit has been 0.2%, which is a very comfortable level. But the moment the oil prices go up, and international oil prices are not in our control at all. So, if something happens in the oil-producing countries, there is some war, there is some tension, then oil prices will zoom again. And if we look at our import bill, so the decline in imports is mainly due to a decline in our oil bill. So, as soon as the oil import rises, then, our total import bill shoots up. And if we look at our exports, although, we also export petroleum quite a bit, but our overall exports have been going down. So even if our petroleum exports go up, if the other exports don't go up, then our trade deficit will rise.
All right. And this also impacts, as far as the IIP figures are concerned, doesn't it? And it's a very direct relation between the export drop and the IIP figures.
Yes, because IIP, the main contributor is manufacturing.
Right.
So if manufacturing doesn't do well, then of course, our exporters are not doing well because it's a direct relation because, our merchandise exports is directly related to our manufacturing, the manufacturing that happens. And, it's very interesting. If we look at our import figures for the past few months, our project goods imports have been declining as well. It is, I think, the second sharpest drop after petroleum imports. So, which shows that there's been a slowdown in manufacturing because project goods, engineering goods, they all go into as inputs for manufacturing. So manufacturing drop is a concern for overall production, GDP as well as exports.
All right, my final question in this segment then is about the Make in India initiative because the government has been really stressing on this manufacturing, boost manufacturing, get people out of the agrarian economy into manufacturing. But is manufacturing the sector, is it doing well enough for it to generate that kind of employment and hope in terms of people for that sector saving India and saving the economy?
Manufacturing is the mainstay for our economy. There is no running away from that. And, the more the government the focus is on that, the better. But, we have to go beyond, mere sloganeering. So when we talk about Make in India, we have to, give enough incentives for people, in the world to come here and invest and make here, and also to our producers here to not go to, countries that are cheaper, say, Bangladesh or Sri Lanka, and produce there. So when we talk about Make in India, the approach has to be holistic, and we have to look at, all aspects, including investments.
All right, investments is something that we want to talk about in our next segment, which is about Finance Minister Arun Jaitley traveling to the United States, and we'll be talking about that after a very short break, so stay tuned for that. Welcome back. Here with Policy Watch. Time now for us to focus on the investment scenario in India. And Finance Minister Arun Jaitley is on a mission. He's in the United States seeking investments into India. And over there, he's expressed confidence that the economic reforms can bring India's growth rate to above 7.5% to even 8.1%. Addressing a select audience in the United States, he said he hoped to pass an amendment to implement on time a new goods and services tax that would unify India into a common market.
Finance Minister Arun Jaitley assuring investors that the economic reforms in the legislative pipeline can push India's growth rate above the 7 to 7.5% range. At a discussion, he said a growth rate of 8.1 to 8.5% is totally achievable.
Nobody is very excited about a 7.5% growth rate in India because a series of reform steps which are in the pipeline have all to be implemented. We now have identified all the problem areas, and I think one by one, as we go resolving most of them, hopefully we should reach what our destination targets are.
Jaitley took questions about the ability of the India's government to push through and, more importantly, implement economic reforms to speed up infrastructure spending and streamline tax policies. He acknowledged the bottlenecks in both areas, but said that the government was making progress.
We intend to make a major shift. There are direct tax rates for corporate tax, which is the mainstay, come down to 25%. So we couldn't afford to live with a much higher taxation regime because that would distract investment coming into India.
The finance minister said he hoped that the upper house of the parliament would soon pass an enabling amendment that would make it possible to implement on time a new goods and service tax that would unify India into a common market. The bill on the GST has been referred to a committee for discussions, and Jaitley said there is a current majority among the committee in favour of the legislation.
The government has started putting money substantially into this sector, though the sector must start moving. The resources have come from the budget, the resources have come from the reduced cess on, the increased cess on petrol and diesel, and therefore extra resources this year have been put in.
Jaitley said he was focused on implementing the tax measure by April 1st, 2016, the start of the new fiscal year. Bureau Report, Rajya Sabha TV.
And we have with us Amiti, Senior Assistant Editor at the Hindu Business Line, to help us understand as far as the investment scenario is concerned. Now, we teased this before we went into that break about the fact that while there are initiatives, a lot more needs to be done for streamlining. Finance Minister Arun Jaitley is in the United States saying that we'll do everything from the policy front to ensure that there's ease of doing business in India. But is there enough happening? Is there enough confidence being generated in an international investor to come and invest in India?
Well, if you talk to any random foreign investor, if you ask him or her what is the biggest challenge you think there exists in the Indian market, they would definitely say policy uncertainty. Because, especially after the retrospective taxation controversy, the confidence of international investors in the policy situation in the country has shaken quite a bit. So I think it is very, very important for the finance minister not only to, talk about, things like tax terrorism that has happened in the past and all, but also, through definite measures show that the government means business when it says that it wants to bring in stability in the policy regime in the country.
All right, but in terms of stability, because a lot is being said, the government says there'll be single window clearances for projects, there'll be most major projects will be brought online in terms of ease of doing business, the internet would be used, online would be used, but is there enough happening on the ground? Is there a match between what the government is saying and at the pace that often India moves? There's always a mismatch in that, and do you think this government has been able to bridge that divide?
Well, a beginning has actually been made, because if you look at what has happened ever since the BJP government has come to power, we do see movement as in terms of steps that have been taken to ease the ease of doing business.
Right.
So, like recently, the Directorate General of Foreign Trade, it actually cut down the number of documents, that is mandatory documents, that is required to export from 7 to 3, which was a huge step. And I think the government really takes seriously the World Bank's report on ease of doing business, where India ranks very poorly, and it wants India to move up. So I do expect to see some activity in that area, because they have made a roadmap. Definitely the roadmap is there. It's just that they have to keep moving in that direction and not lose interest.
All right, but we talked about this in the first segment, about the global economy being sort of still not completely out of that slowdown that we saw happen a few years ago.
Yeah.
So in that sense, has India emerged as a viable option? Is India emerging as a viable option? Because, I mean, given the fact that the IMF says India is going to surpass China's growth rate. So in that sense, do you think India has emerged in terms of the eye of the global investor, that this is a destination that perhaps we could put a little bit of money in?
See, India has the largest middle class. So that is what is attracting the foreign investors into the country, irrespective of all the policy flaws that we have. So that is the biggest strength of the country, and that is what the government is trying to build on. So since we have the basic requirement that takes to attract investors, we also have a large pool of labor, which is a big plus for manufacturing. So we do have the basic requisites. So I don't see that there is a the high growth rate potential that people are that agencies are ascribing to India. They are way off the mark. I don't see it as like that at all. It's just that the government has to stay on track.
All right, you talked about growth rates, and that is quite interesting, because we've changed our method of computation of of GDP.
That's right.
And in that sense, do you see the global investors also saying that, yeah, fine, they're at 7.5% right now, though it's a completely different method of calculation, and by the previous method of calculation, the growth rate figures would be substantially different, won't they?
That is right. Growth rate numbers are important for attracting investors, but we have to understand that at the end of the day, these are just numbers. Under a different computation method, you may have higher growth figure, but if it does not translate into better decisions at the policy level, easier ease of doing business and things that will really help people to manufacture in the country, to export from the country, I don't think just a little change in computation method which increases growth figures would make that kind of a difference.
All right, but what would then make a difference? You mentioned about the clearances, that ease of doing business. But I mean, the fact is that there are a lot of initiatives. We've spoken about Make in India, the fact that the government is trying to boost manufacturing. They're opening up investment into various sectors that were traditionally closed. But there are a lot of issues, and India being the country that it is, given the fact that economic decisions also often become very political ones. So in terms of how the government is able to push through its agenda, do you think there is that kind of a reform agenda, and is the government being able to push through that? Because, for example, retail, if you talk about retail, FDI in that, I mean, it's still not very clear as to what the government's own stand is.
Yeah, as I mentioned earlier, policy stability and clarity of policy is really important to, send the right signals to global investors. Like retail, you mentioned retail, it's a very interesting example. On one hand, government feels politically compelled to say that it will not allow FDI in retail, at least, in the current scenario. But at the same time, it has not done away with the older policy, which allows 51% FDI in retail. So basically, these are confusing signals, because you're trying to, just signal to the global community that, we may open the sector sometime because the policy is still there. But, when journalists ask you questions, you say, no, we have to protect our own small retailers, and so we won't open. So So those are the things that I think the government should avoid. So if you have decided to do something, you just go out and tell the world in clear words that we have decided it. So, on one hand, we have a positive decision in the area of insurance, which has lifted the image of the country a bit. But on the other hand, there is an area like retail and also, also the land acquisition policy.
Yeah, I was just about to come to that because to drive in investments into the country, you're asking companies to come and set up big businesses, big factories in India. I mean, from the times of the SEZ policy to now, where we've come, in terms of land acquisition, that still remains a cause for concern. That still remains one of the big sticking points as far as development of infrastructure across the country is concerned.
That's right. The problem with the land acquisition policy is that I think the government was, it became just too ambitious. It wanted a lot of things at one go, which you can't do because, when you're talking about land acquisition, you also have to think about, people from whom you're taking the land. So as on one hand, you have a good package, but at the, on the other, you make acquisition, at the will of the government, completely at the will of the government. So even if, all the people in a parcel of land are saying that please don't take our land, so that will not count for anything. So that kind of things are not politically, you cannot sell such a thing politically. So because of, this over ambition, the whole land acquisition bill has come to a standstill.
Absolutely.
And as long as we don't have clarity on land acquisition, then, investors are not comfortable at all. So there is a fast, you talked about US some time back. So there is a fast track on for US investors that the government has set up. And the biggest, problem that many US investors in the country have been talking about is land acquisition. So we have to realize that it's a big issue and you have to tackle it by, taking a middle path.
All right, but as far as Finance Minister Arun Jaitley is concerned, I mean, what he's been saying in the US, just deriving my question from there, he's talked about the goods and services tax as the most critical reform. And it certainly seems ambitious, but there is enough traction among state governments that the government has been able to generate. Do you think this goods and services tax could very soon become a reality? And in that sense, ease of doing business would become better in India, more investments would come in. Is that critical factor that could really change things around?
It could if, GST, the ultimate GST, the shape that it will finally take would be close to what, the GST initially aimed at, to have a uniform tax across states. So if you look at the problems that still exist, that, still have to be basically sorted out with some states, one of the issues is, that the states want to impose some kind of a tax of their own. So if that kind of a tax is imposed, then the very objective behind the GST is lost. So and the GST thing has been dragging for so long that I think till it happens, people are not going to believe that it's happening. So.
All right, but the finance minister, I remember from his budget speech, I mean, he talked about the fact that everybody expects a big bang reform, and if you have a big bang idea, come to me. That's what he said. They come to me and tell me and I'll implement it. He's talking about incremental reforms. On one hand, there are incremental reform happening, I mean, in the sense that, fine, the land acquisition bill or the GST bill might be landmark reforms, but they're still not a reality. So incremental change, is enough incremental change happening in the economy to boost investor sentiment, or is it not? And as far as the big bang reforms are concerned, do you think the government should do more? Perhaps divestment is a good route to generate more money as well?
Well, that depends on what kind of things you're divesting. So if you're just divesting the the cash rich PSUs, then I don't know, because there is the other side of argument as well, which says that the PSUs that are working well, why not use them to generate more resources, to generate more jobs. So I don't know whether selling off PSUs, of selling off your assets to generate more wealth for the country, whether that is that, because ultimately you're going to run out of it. So right. to have as a long term growth plank, I don't think that is a very sustainable one.
All right, but in terms of then big ticket reforms, what are we looking at? We're looking at the GST, we're looking at the land acquisition bill, but is that enough? My question simply remains that, is that enough to boost investor sentiment? Is the Indian economy's health good enough to say that, fine, people who've been investing in elsewhere around the world, the FIIs come to India and say that, fine, India is now stable, India is good, let's put our money in over here?
Well, see, land is a very important aspect, as we've already discussed. So if we have a proper land acquisition bill in place, I think that is going to take care of a big portion of the problem that international investors have in the country. And as the FM has said in the US, that all the concerns that investors have related to taxation policies in the country, that the country is that the finance ministry is very actively looking at. So if they can take care of the concerns, of the genuine concerns that the investors have, not that we have to just go totally by what investors want, because there is no end to what they want. So, but the genuine concerns, if they are taken care of, I think taxation concerns, land, that will take care of more than half of the problems that investors have.
All right, so let's hope that the Finance Minister, Arun Jaitley, in his trip to the United States, can drum up a lot of investments. Amiti Sen, thank you very much for coming in and helping us understand these figures of trade deficit, and also as far as the investment climate in India is concerned, that a little better. Thanks so much for that. On that note, we'll wrap up Policy Watch for now, but we'll be back next week with another edition, so do stay tuned to Rajya Sabha TV.